Hey guys, how's it going? It's Andy from Go Investing. Happy Saturday. I've decided to switch things up. I think I might try the Tuesday, Thursday, Saturday, because that might work for my current schedule. But in today's video, I wanted to get back to the series that I was working on before. I've kind of taken a couple breaks in between, and I wanted to talk about my favorite stocks from each of the 11 stock market sectors. So far, we've talked about energy stocks, financials, which are the bank stocks, and then we recently did the real estate stocks. And today we're going to be going to a sector that when I first looked at it, I was like, I feel like this encompasses a lot. But today we're going to be talking about consumer discretionary, which is kind of this umbrella term for anything that is sold from a business to a consumer, not to another business. And it's something that's not required for day-to-day life. So this is pretty much anything, pretty much most stocks that you would think of as like retail stocks, stuff like that could be considered to be in this sector. So we're going to be talking mainly about the retail stocks. And so unlike these other videos where I had to do a lot of research to find out about three different energy stocks that I actually liked, there's a lot of retail and consumer discretionary stocks that I actually really enjoy. So it was a lot easier for this video, and there's probably a lot of stocks that you would consider to be in this sector, and I'm very curious to see what your guys' three favorite of these stocks are in the comment section down below. And looking at the ETF that follows a consumer discretionary sector, which is going to be ticker symbol XLY, it has outperformed the S&P 500 pretty significantly. So far it's up 18% in the last year compared to only being up 9% for the S&P 500. And in the past year, retail stocks are up 91% compared to 69% from the S&P. So unlike all the other sectors that we've talked about so far, these stocks have been outperforming the overall market, which is always something nice to find. So in this sector, you're not going to be finding a lot of stocks that I would consider as being these beaten down stocks. Stuff like JP Morgan has been one that I've talked about a lot, Southwest, and then I recently bought into Planet Fitness. There's going to be stocks that are up in 2020, but there's still a lot of great opportunities for long-term investments. I'm excited to talk about it. In today's video, I'm also going to be talking about what I see on the charts for each of these stocks and where I'd be looking for a fantastic buy opportunity. Before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been liking these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel grow. With that out of the way, let's get started and talk about my three favorite consumer discretionary stocks to buy going forward for a long-term investment. So the first stock I wanted to talk about on this list is going to be Lululemon, ticker symbol LULU. Currently, Lululemon is trading for $310 and it's up 34% in 2020. This was a stock that I included on my Becky list, which is this group of stocks that are considered the classic white girl stocks. So this would include stuff like Starbucks, Planet Fitness, which is something that I recently added to my portfolio. And if you missed that video, I'll link that above right now. But Lululemon was also on that list. And so in the past 5 years, those stocks have significantly outperformed the overall market. And Lulu is a great example of that. And looking for a technical trade on Lululemon, I see two great opportunities. The most recent comes from its recent support of $290, where we saw a very nice bounce. And then the other area I'd be looking to buy into the stock would be the very top of the charts before the pandemic hit, which is around the $250 mark. So I have alerts set for those. And I think if it comes down to those levels, I would actually consider buying into the stock. I think their product is fantastic. I recently had my roommate and one of my old roommates come up and visit. We went to the Lululemon store. And while it's not a product that I use myself, I understand why people like it. Its quality is so high. And they just have this brand about them that's very attractive. And so in their last earnings report, Lulu beat expectations on sales, and their CEO came out saying that they were cautiously optimistic about the rest of 2020, which when we looked at how things looked just a couple of months ago, that's a very good sign for the company. And so from that earnings report, I just wanted to read some numbers. Year-over-year revenue increased by 2%. Their online sales jumped by 160%. 97% of their stores are back open. And as I mentioned, they had that huge jump in online sales. And so I'm curious if that 97% of stores being open, the 3% included the Oregon stores because we tried going there for a week, and as a result of the wildfires, most of the retail stores here have been closed. So I'm curious if that's where that came from. But they have plenty of cash on hand with $523 million, and they announced in June that they were going to be buying the fitness company Mirror. And if you don't know what Mirror is, it's a really interesting idea. It's a $1,500 mirror that has a video screen on it and allows you to live stream different workouts for $39 a month. And so if they bought this company like a year ago, I would have been pretty skeptical. But based off of the success that we've seen with companies like Peloton, who have done so well during the pandemic with the at-home fitness space, I feel very optimistic about this purchase going forward. And so in that earnings report, the CEO came out and said that they expect Mirror to bring in $150 million in revenue in the first year, which is up from the previously stated expectation of $100 million. So this could be a huge part of their business model going forward. And I'm a big fan of them branching out from more of just the athletic wear. Now they're going into software and actual hardware. So I think it's very exciting for the company's long-term potential. And so recently they've seen some very nice increases in their revenue. Year over year, they had a 21% increase, and then they had a 24% annual increase in 2019. So this company is growing rapidly, and I love the fact that they're expanding their business, which is always something you want to see. And so going into a potential recession where money may be tight for a lot of people, I don't think this is really going to impact Lulu that much. If you think about the people that are going to be negatively impacted by poor economic conditions, I don't really think of people that were already buying Lulu as being those type of people. This is an expensive product, and I don't expect them to see that much of a drop. That's going off of the fact that we saw a 2% increase in sales year over year, even with the pandemic, which is not something you can say about a lot of other companies out there. So I think their overall business model is pretty safe. I think that their high-end product might get hit a little bit if we have a full-on recession, but I don't think it's a huge risk going forward. And I think it's just a pretty solid stock overall. As I mentioned, I'd be looking to buy in 290, which is the most recent support, and then the solid support that I'd be very optimistic about is if it came down to 250. So that's what I'm looking at going forward, and I'm very curious to see what you guys have to say about Lulu, ticker symbol LULU, in the comment section down below. Next up on this list, I wanted to talk about Nike, ticker symbol NKE. Being a recent transplant to Oregon and living like 5 minutes away from the Nike headquarters, I feel pretty obligated to talk about Nike anytime I have the opportunity to. Also, before we go into this stock specifically, I do want to disclose that I am a shareholder of Nike, a proud shareholder of Nike, and I just want to get that out of the way, just so you know any biases that I might have towards the company. Currently, the stock is trading for $123, and it's up 21% year to date. Just in the past 5 days, the stock has had some significant moves. On Wednesday, it was up more than 13% at one point, and I believe it closed the day being up around 9%, and that came from its earnings report. And then on Thursday and Friday, the stock has been sliding between 1% and 2% every day, giving back some of those gains. But that earnings report was very positive overall, as you would expect, considering it was up 13% for a blue chip stock. So Nike did release their earnings for first quarter of fiscal 2021 that ended on August 31st. And similar to what we saw with the last earnings report, a lot of the success of the company came from their digital space, where that was one of the huge things that bailed them out. In their last quarter, they did have a lot of problems with, I believe, their revenue being down between 30 and 40% year over year, but this earnings report was very solid. We saw an 82% increase in digital sales, and revenue was flat year over year, which is much better than what we saw in the previous quarter. And so the digital sales have been really saving the overall revenue. And so the company announced that most of their stores are back open, and that store sales and wholesale sales should increase in the next few quarters, which is an area that lacked during the pandemic and hopefully will be coming back strong. Also, just like in their last quarter, China has been a bright spot, where they saw an 8% increase in revenue overall, where they actually saw a 1% drop in revenue in the US. So China has been pulling the weight from the drops that they've seen in North America, and that's always a great sign. And two really interesting areas that did really well in the last quarter was women's apparel that grew by 200%, and then Jordan Brand, which they mentioned as being a positive spot, but they didn't put any numbers behind it. And a really positive thing that came out of this is that they actually announced a fresh outlook for fiscal 2021, which is not something that we've seen from a lot of these larger companies that are at risk with the overall pandemic. A lot of them cut guidance because they really didn't know what was going to happen. And they expect to see high single digit to low double digit sales growth year over year. So that's very positive. I'm always looking for like 8% growth. So that meets my expectations. They had a net income of $1.5 billion, which is great considering their last quarter. They actually had a surprise loss after their revenue dropped 40% year over year. So a very nice bounce back quarter for Nike, and shareholders were rewarded with a 13% jump at one point and then closing up around 9%. And so looking at the charts, I don't see a lot of great buying opportunities right now. It recently did just come off all-time highs, and I really don't like buying at that point. But looking at the chart, I have found two great zones where I'd be willing to buy and add to my position. If it comes down to $105, I'd probably buy in, and then I would consider going all in if it drops down to $90. I think $90 is a fantastic area to buy, and I'm gonna be having an alert set for both of those. I'd be taking a smaller position at 105, and then 90, I would be throwing as much money as I have available into Nike. But I'm gonna be pretty patient with my position. I'm already a shareholder with my average price being at $83, so I'm gonna be looking to add if it falls to those levels, but right now I'm very happy with the growth of the company. This is a fantastic bounce back quarter for Nike, and I'm very curious to see what you guys have to say about it in the comment section down below. All right, the last stock for this video is gonna be Dominos Pizza, ticker symbol DPZ. And so originally I hadn't really thought of this as being a consumer discretionary stock, but I saw someone else put it in their list, and I really like this company, so I decided to throw it onto my list. So currently Domino's is trading for $414, and it's up 41% in 2020, which is a very nice increase. So in their last earnings report in July, So this is pretty old at this point, July. They're gonna have their earnings in the next month, but based off of the data that we have, the stock beat expectations across the board and had almost $3 a share of net income, which is very surprising. I was expecting them to have a pretty nice net income, but $3 a share is pretty high, and that's compared to $2.20 a year over year. So that's a very nice increase. They announced a revenue of $290 million, which is a 13% year over year increase, and US store sales increasing by 16%. However, the company only saw international growth by 1%. So the US market is growing significantly faster than international. That might be because of, similar to what we talked about McDonald's, the drive-through aspect of things isn't very common in Europe. And so it might be possible that delivery not as utilized as something like we've seen in the US with the exponential growth of companies like Uber Eats, Grubhub, Postmates, stuff like that. So I didn't really look too deep into that, but the US has been growing 16% in the last quarter. Looking at the revenue overall, they've seen nice annual increases with a 5% jump in 2019, 23% in 2018, and 13% in 2017. So that's pretty good. We had the last year was a 5%, which is less than the 8% that I'm usually looking for, but it's made up with the fact that the 2 years before that at 23% and 13%. So very solid numbers overall. With their net income, they've steadily increased it, and they've had positive quarterly year-over-year growth since 2010. So all the numbers look really solid for Domino's, and for any shareholders involved with Domino's, they've been rewarded in 2020, being up 40%. So looking at the numbers, in the past 5 years, the stock is up 285%, compared to the S&P being only up 69%. And looking closer, I see some interesting trades on Domino's. It seems to be going pretty horizontal at this point, and I see it as a pretty decent swing trade opportunity. I do like it for a long-term position, but anytime you see a stock bouncing around and being pretty horizontal, I always think swing trade. So in my mind, I see a swing trade between 380 and 425 that would give 12% profit if I could execute it correctly. And there's a set in stone area to cut losses if it drops below 380. So I see a lot of options with this stock. It'll be very interesting to see what happens. It just got up to a recent resistance, and it seems like it's been rejected. So I have my alert set at 380, and if it goes down to that level, probably take a position and give it a shot. I haven't done a normal swing trade in a while, and I'm kind of excited to do something like that now that the market has calmed down a little bit. But I do like the stock for a long-term position. I like it for a swing trade, and I think there's a lot to like. All the numbers look very good. The annual returns have been fantastic. The year-over-year growth for revenue, net income is fantastic. And so overall, I think Domino's is a very solid stock, and I'm very curious to see what you guys have to say about it in the comment section down below. So overall, that was my video on my 3 favorite retail or consumer discretionary stocks. We talked about Lululemon, ticker symbol LULU. We talked about Nike, ticker symbol NKE. And then we finished off the video talking about Domino's Pizza, ticker symbol DPZ. And so I'll put some honorable mentions. I wanted to talk about Starbucks, TJX, which is going to be the parent company that owns stuff like TJ Maxx, Marshalls, Sierra Trading Post, and then Target. I think these are all fantastic opportunities, but I thought these 3 stocks that I mentioned looked the best right now. So that's why I wanted to talk about them. And I'm very curious to see what your guys' 3 favorite retail or consumer discretionary stocks are in the comment section down below. Thanks for watching this video. I appreciate all support, and I'll be back likely on Tuesday. I'm still trying to figure out my overall schedule, but I will see you guys then.